Hello and welcome to today's More Report. Chart Appraisals on Monday the 9th of January with the Japan market analyst at Handtech Markets. We've got what has developed into a bit of a mixed outlook really on markets today. Equities are lower, pretty much as has been developing through the session. DAX and CAC are sort of about 0.5% lower. FTSE is actually up, and that's come with this sterling strength that has been driven by comments over the weekend by Prime Minister Theresa May that suggested that the UK was probably moving towards a hard Brexit actually, and they were not going to be sort of cherry picking bits out of membership from the EU and in their negotiations. So market's taken that as sterling negative, and we've seen a big breakdown on sterling on the back of that, sort of 140 ticks now. In terms of the dollar, though, we had seen on Friday certainly the dollar strength in the rebound on non-farm payrolls report, which contained that average hourly earnings data, the wage growth that was pulling higher again, 2.9% on the wages. That sort of helped to drive expectations of further rate hikes for the Fed and inflationary pressures coming through. So that certainly pulled Treasury yields higher, the 2-year bouncing, the 10-year bouncing, and also interesting that the 2s10 spread had initially started to pick up, but I still think that is a chart worth looking at because earlier on today that was up back above 1.9%. Just dropping back again in the last sort of few minutes as this dollar correction and subsequent 10-year treasuries basically trading at the treasury yields are at the low of the day now. So it is certainly still a treasury yield driven move, I think, on the dollar, and what we're seeing at the moment is the dollar just consolidating because it is actually mildly weaker against the euro and also against the Aussie dollar, Kiwi dollar. Interesting moves that we're seeing on these currency markets today. Now, the factors that we need to look out for today, basically just really the Eurozone unemployment at 10 o'clock. Now, that's expected to come in line with last month at 9.8%. Where is it? There it is. And you see on this, it actually has been dropping quite consistently in the last few years really, but just not really fast enough for Mario Draghi and the ECB to really take heart from that too much, and unemployment, or the elevated levels of unemployment in the Eurozone, are still a key factor behind a lot of this political unrest that we are seeing. Now, my chart today is the FTSE 100. Now, FTSE has been up for 13 days out of the past 14. And that bear candle there was 10 completed sessions ago. So if we have a bull candle today, that would be 10 sessions in a row of gains on FTSE 100. So an incredibly strong run higher. 78 on the RSI. I'm basically saying this because, well, this goes back a long way, doesn't it, the RSI? 2013, May 2013, last time it was up at this sort of level. Now, you could argue that the market is beginning to look a bit stretched. Now, again, as I said, that the European markets are fairly sort of weak today. Now, the only reason FTSE's up is the fact that I think sterling is so weak. And a weak sterling is positive for FTSE. However, I don't necessarily see this as such a positive move higher. Now, yes, you have seen a breakout above the 72.10 mark, which had been sort of holding us back, 72.10, which had been holding us back in the last couple of days. Breakout above there today. Will it last? I'm sort of not really convinced about this. I see these momentum indicators, which are positive. I think you can still say they are pretty strong on the hourly chart, but still, I think that it'll be interesting to see if that is really a drive higher that can sort of push on and continue this these gains in the FTSE 100. I'm not convinced that it's going to continue too much further, considering the run higher that we've had. But these momentum indicators on the daily chart are still pretty strong, but I would say that the upside potential is beginning to look a little bit limited, certainly with the DAX not really pushing on, and this drive really just being seen through sterling strength. Through sterling weakness. So it would need to have sterling weakness continuing to have that move. Now sterling is approaching key support at 2080, 2140 at the moment, so whether it can continue to decline or not, and subsequently FTSE continue to rise, remains to be seen. So the supports you're looking at on FTSE, certainly a reaction low on Friday, 7180, which is sort of 50 ticks away from where we are now. 7170 as well, area 7160, 7170, and then you're sort of back at old breakout levels as well, 7140 area. So there are a few levels really to work with, but nothing significant in terms of support. So if you did start to see a corrective move on FTSE, maybe back towards 7130 could be fairly quick in the making. So I wish you good luck in your trading today, and I will speak to you later. Thank you.